Dear students, today we can discuss about goods and service tax GST. Before going to GST, first we can talk about different types of taxes. So there are mainly two types of tax. One is direct tax and second indirect tax. So direct tax means the tax which we paid directly to the government. The tax mainly we are collecting on our income or profit, which we normally paying directly to the government. Example, if you say income tax, corporate tax, like these taxes we are paying directly to the government. So they are direct tax. But indirect tax means the tax which we are not paying directly to the government. And we are mainly discussing today about our indirect tax. Actually, we paying tax, but we are not paying directly to the government. We are paying it is through someone. That is, it is indirectly we paying to the government. So when we are talking about indirect tax, we can come to the topic goods and service tax, that is GST. First we can know about what is the meaning of GST, that is goods and service tax is an indirect tax imposed on the supply of goods and services. In our country, whatever supply of goods and services happen, for that supply of goods and services, we will impose the tax. That tax is an indirect tax because we are not paying directly to the government. We are paying indirectly to the government, this GST. So such a tax normally we will say goods and service tax. Its other features we can see, it is a multi-stage destination based tax imposed on every value addition. So actually it is a destination based tax. So where is the goods is reaching, there only tax is collecting. So that is the reason GST is a destination based tax. And GST has replaced multiple indirect tax. Before introduction of the GST in our country, we are having so many different varieties of indirect tax. So now these all indirect taxes are replaced by a single tax, that is GST. Except for a few indirect taxes under the state and central government are subsumed to goods and service tax. Before we said so many indirect taxes were there. Now most of the indirect taxes like sales tax, excise duty, service taxes, these all we subsumed, we replaced and made it into a single tax. That single tax is GST. GST has brought the entire country under one tax regime. So we following now one tax, one nation, or one nation, one tax policy we following. So the entire nation or entire country, we are following one tax regime now according to GST. So goods and service tax is an indirect tax. We are imposed on supply of goods and services. So this point always remember. Now when you talk about different types of GST, there are four types of GSTs there. One is SGST, that is State Goods and Service Tax, CGST, Central Goods and Service Tax, IGST, Integrated Goods and Service Tax, and UTGST, Union Territory Goods and Service Tax. State Goods and Service Tax or SGST is the tax which is collected by the state government for intra-state purchase or sale of goods and services. For any intra-state supply of goods and services, state government will collect tax which is GST. Intra-state means within one state. The transaction is happening within one state, that we will call intrastate. So any intrastate supply of goods and services happen, state government will collect tax, that is GST. Next is central goods and service tax or CGST, that is any intrastate supply of goods and services, central government will collect tax. That tax is CGST. So any intrastate supply of goods and services, state government collecting tax is GST, central government collecting tax is CGST. Now, integrated goods and service tax, that is IGST, any interstate supply of goods and services, any interstate means the transaction is happening between states or between union territories. If the transaction happen out of the state or out of the union territories, then the central government will collect the tax, that is integrated goods and service tax, that is IGST. So IGST is the tax which is collected by the central government for interstate supply of goods and services. That means the supply of goods and services going beyond the state or beyond the union territories, then IGST will be applicable. Then last, union territory goods and service tax. Union territory goods and service tax or UTGST is applicable when the intra-union territory supply of goods and services. That means within one union territory, the supply of goods and services happening. Then union territories, intra means all union territories, it is not applicable. You should remember UTGST is applicable to the union territories without their own legislature. Which union territories not having their own legislature, such union territories any transaction happen within. That means intra union territory supply of goods and services which do not have their own legislature, at that time only UTGST is applicable. That means UTGST is not applicable to Delhi, Jammu Kashmir and Puducherry because these three union territories having their own legislature. If any transaction happening within these three union territories, UTGST not applicable, then SGST is applicable because they will consider same as like a intra-state purchase. But other union territories without their own legislature, the UTGST will applicable if the transaction happen within that union territory, like Andaman Nicobar, Lakshadweep, Daman Diu, and what will say other all union territories. Without legislature, we will use UTGST. So how many GSTs are there? We already said. For SGST, state goods and service tax, CGST, central goods and service tax, IGST, integrated goods and service tax, and UTGST, union territory goods and service tax. Now we will discuss about input tax and output tax. You may be heard about input tax in GST or input GST and output in GST or output GST. You remember, tax paid on any purchase of goods or services that are used or will be used for the business. Say any purchase of goods and services happen, then for that the tax which we paid, such a tax we will call the name input GST. Input GST is an asset for the business. Why it is an asset I will discuss down. Now before that we can talk about output. Output GST. The output GST is the tax which we collected on sale of goods or services, and if it is any sale of goods or service happen, the tax which we collected, that tax we have to pay to the government. That is the reason the output tax is the liability of the business. The tax collected on sale of goods or services is called output tax or output GST. Output GST is a liability. Now when we come to the input, whatever output GST which we collected by sale of goods and service, that from the output tax, the input tax which we already paid at the time of purchase of goods and service, we can deduct. Balance amount only we can pay to the government. That means from the output tax which we collected, we can deduct the input tax which we paid. The balance output tax only we can pay to the government. Suppose when you deducting from the output tax input tax, if excess input tax is there, that we will call the name input tax credit, ITC. We will normally say ITC or input tax credit. That input tax credit we can carry forward to the next month. So that is reason, it's a benefit you will get in the coming month also. That is the reason the input tax is an asset. We will get benefit because the input tax we can deduct from the output tax. The balance output tax only we have to pay to the government. So output tax is a liability. Input tax is an asset to the business. Okay. So I hope everyone understood what is GST and what are the terms which is connected with the GST. Thank you.